Oh my gosh, we're starting to finally, after 16 months, see a slowdown in this home price escalation. It's been so crazy. And right now it's like middle of winter. There's snow on the ground. People are wondering, it's like, oh, is this just a winter slowdown? Or is this the beginning of like a correction or a nasty shift in the market? Today, we're gonna evaluate all the facts, and I'm gonna help you understand what direction the market's really moving in.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
You know, last year I made millions of dollars on my real estate portfolio. And of course I bought a lot of new homes and I got to add to it. And because I buy these entry-level single family homes, there was nowhere to go but up. 16 months later though, the market's starting to shift and people really are curious. They're like, wow, like, did I make dumb decisions last year? Should I have not bought it? Did I buy it recklessly and all of a sudden it went up, but it was never gonna really stay up? And so I think there's a lot of worried people. So I wanted to make this video today because, first of all, there's a price range of real estate that is disturbing and you should really try to stay away from. But there's a lot of people that are buying in that zone. It makes me kind of nervous for them. On the other hand, I do have some really strong feelings, especially based on the data, of what's happening in the real estate market. So I'm gonna help you understand whether we're really just looking at winter as far as things look, or are we really talking about a major climate shift in the directionality of the value of real estate. So this is what this video is really about today. How much will home prices shift in 2022? Like, is the trend over of them going up, or are we gonna see that come back? Is this really just a winter thing? Check this out. This article recently came out from Fortune, and they said that the recent appreciation trends are starting to show some interesting signs. Quote, the rate of the US home price growth is finally beginning to decelerate after 16 consecutive months of price acceleration. And you have to ask yourself, it's like they've been growing so steadily, like all of a sudden, is there a crazy shift? Is there a slight lowering in the shift? Are we going to see a bounce back?
Every week I bounce back.
These are all important questions based on the choices you've been making in real estate. So first of all, let's get our bearings straight. You understand that real estate for the last 65 years has been growing every year by an average of 4.6% a year nationwide. And we know that in the last 2 years, we've seen 18%, we've seen 20%, we've seen some really big crazy numbers. And those percentages may not seem huge, but when you think of a $300,000 house going up 10%, that's a $30,000 increase. But if it's gone up 20%, that is a $60,000 increase. If over 65 years, we've been averaging 4.6% year over year over year, what are they predicting for this next year? Check it out. Realtor.com just came back and they said, here's what we're predicting for 2012. We think next year the market is going to go up just 2.9%. That is 30% less than our annual increase for the last 65 years. So they're basically saying, yeah, I think we are actually going to see a cool down. And remember, this is Realtor.com. So yeah, the prices are going to go up, but just a smidge.
Just a smidge.
Yeah, but you have to remember that the United States is not a market. It's 324 markets, and some of them are growing steadily in one direction, and some might be growing in a different direction. For example, buyers and sellers alike shouldn't necessarily expect the forecast of 2.9% home price growth in their local market. Projected growth rates vary from 10% in Portland, Maine, to 0.2% in Honolulu. In fact, these are some of their more bullish predictions. They got 10% in Portland, Maine, 9.5% in Rhode Island, 8.5% in Salt Lake City, 8.2% in Worcester, Massachusetts, 7.9% in Boise, Idaho. And then you can see we got some Florida, some California, some Spokane, Washington, Boston, Seattle. There's still plenty of markets around the country where they're projecting not this 2.9%, that might be their average, but in these cities, 7.5% to 10%. Again, that's a big deal. You got a $300,000 home and it goes up 10 more percent this year. That's $30,000. You might have actually gotten into that home with a 3% down payment, like literally 10 grand out of pocket. And guess what? It goes up $30,000. And that's like a 300% increase on your investment on a house that you bought last year. That's still really wild growth. Let me show you something kind of interesting. When I buy a property, I look at the money I make on it in 3 different ways. Let's just say for a moment that we're talking about a $200,000 house. Now, depending on where you live in the country, it's like, Kris, do they even make those anymore? This is still pretty close to my average purchase price when I buy an investment property, right? These are entry-level single-family homes. I rent them out. 5 years later, I sell them, and I double, triple, or quadruple the portfolio. Because if 1 home makes money, then 4 homes is going to make a lot more money, and 40 homes makes a lot more money. So what are the different ways that I make money? Well, the first way is with cash flow. And cash flow is a percentage of what I put in. So let's just assume for a moment that I put 20% down on this $200,000 investment. Let's just call it 40 grand. So if I were technically $40,000 out of pocket, but this property had a positive cash flow of, $400 every single month. At the end of the year, let's just say it came to 5 grand. Well, I put 40 grand in and I made $5,000 back. That's roughly, if you look at that cash on cash, that's well over 10%, right? I put 40 in, I got 5 out. Like, I'm making more than 10% on my cash on cash. But that's not the only way that I'm making money. You see, the home also appreciates, like we've been talking about. And when we talk about appreciation, let's just say that this $200,000 home goes up. Let's just, for easy numbers, let's call it 10% like they're predicting in Portland, Maine. Well, 10% on $200,000, that is another $20,000 increase. Well, if you take a look at that math. If I got $5,000 on my cash on cash, but I got $20,000 on appreciation, $20,000, that's half of the $40,000 down payment. So on my down payment, that is a 50% return on my money. And the third one is, if I am renting this house out, you realize that your renters are paying your mortgage every month, which means that every month your mortgage is being paid down. Did you know that on average, that when someone is paying off your mortgage, meaning you have a renter in there and over time they're just gonna pay that thing off for you, did you know that you average right around a 5% reduction every single year compared to your cash on cash? Let's add this up. If I'm getting 10% from my cash flow, 50% from appreciation, 5% from the people paying off my mortgage, that's a total of 65%. That 65% means I put 40 grand out and 65% of it, 2/3 of it was essentially made back in the first year. Some of it cash in hand, some of it just in the value of the property. And then that last part is in the mortgage that actually went down. This is crazy because for me in real estate, guess what? If I can earn at least a 25% annual ROI, not more than double that, 65, if I just get 25%, I make 27 times more money than the stock market, which means 401ks, IRAs, and things like that. That's why real estate makes people rich. So I just want to be clear, when we say that there are parts of the country where they're still expecting 10% growth, guess what that means? For a real estate investor, that literally could mean that their ROI that year goes up 50% more, or even if it's 30% more, that is kicking compared to like leaving money in a CD, a certificate of deposit, or leaving money sitting in a bank earning 0.0 nothing percent. That's pretty wild.
It's wild.
It's wild, huh?
It's wild.
Oh yeah, that's wild. Yeah.
Realtor.com goes on to talk more about this pandemic-related growth. They say that many of these growing markets that are still growing much higher than 2.9% saw a large inflow of remote workers during the pandemic as they sought to leave higher cost areas. Like this is happening in Utah right now. Think of California. These people are saying, wait a second, I don't have to live in California. California taxes right now are brutal. You're actually being punished if you try to leave the state. So you know what? Now's a great time to literally, one of my best friends, he just offloaded his mansion, sold it for a pile of money. He can now move and live wherever he wants. Why? Because the new work economy says, dude, flexibility. You know, you can work remote. You don't have to work from home. And that means that California and some of those more expensive places, also like Seattle or along the East Coast, they're saying, hey, if I can live anywhere, I'm going to cash out while the market's high. I'm going to get that money out of that real estate and I'm going to be cash rich. I'm going to move to a much less expensive place. And a lot of that is happening right now. Personally, though, I disagree with Realtor.com. I don't think we're looking at an average of 2.9% growth. I think it's more than that. Don't forget the shortage, and don't forget what's happening to the millennials. They're now starting to enter their prime buying years. And the amount of shortage that we have on the millions of homes, that's not going to get resolved in 2022 or 2023. This is a problem that's going to take the better part of a decade to fix itself. Personally, I'm way more bullish on the market. Right now, we are just at the beginning of one of the most exciting real estate journeys of the next decade. You should be a subscriber on this channel so I can keep you up to date with what's really happening for real investors that are buying homes every single day. And I want to talk to you for just a moment if you feel like you're missing out. It's easy, right? Real estate investing isn't exactly like an easy thing or else everyone would be doing it. But are you actually aware that you could actually buy some of that really hot real estate with me right now? Literally, I'm getting my hands on some of the very best deals out there, and I've got more deals than I know what to do with, which is why a lot of people here on YouTube, if you've got 401ks or if you've got IRAs or if you've got equity sitting in a property, you're like, you know what? I've always wanted to get in the real estate game, and if Kris is right, and I'm not promising I am, but if Kris is right that this is going to be the best decade to be investing in real estate, I might as well do it with an expert. And I don't really know any of my peers that are out there saying, hey, we can do this together, but I am one of them. So if you click the link below, you can learn more about partnering with me. And what that really looks like is I'm going to be active and I'm going to do all the work with my team of 200 experts. We're going to be pro in our space. And you're going to leverage some of that money from 401ks, IRAs, savings, or equity in your home. We're going to come together. And if we've got the right makings of a great partnership, I'll do all the work. You put up the money, we'll split all the profits equally, but more importantly, we're gonna roll it forward. We're gonna buy a couple of homes and we're gonna turn them into a dozen homes and we're gonna turn them into a big portfolio, a multi-million-dollar portfolio. How does that sound? Okay, Kris, so maybe I do wanna partner with you, but where would we even buy these homes? Like, will they be in my backyard? Will they be in your backyard? Not likely. Remember, there's only 5 markets right now that I'm interested in. The 5 best markets where I'm getting the highest ROIs. And I'm talking about record high ROIs, higher than I've ever gotten before. And if you want to know where I'm getting them, you should click this link right here, watch this video, and let me show you my top performing markets. I mean, there is snow on the ground, right? Like, it's winter and people are kind of scratching their heads a little bit. Is this is this? I won't know that.